Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 1st of April. US employment report takes center stage. Today, investors' gaze is locked on the US employment report for March. The forecast is for non-farm payrolls to increase by 205K, down from a 242K surge in February. The unemployment rate is expected to have remained unchanged at 4.9%, while average hourly earnings are forecast to have rebounded on a monthly basis after February's unexpected fall. The ADP report for the same month exceeded expectations by 6K, which increases the possibility for a positive surprise in the NFP figure as well. However, the ADP print is a less reliable predictor for the NFP than the payroll forecast itself. Since 2011, the correlation between the ADP and NFP prints at the release dates, prior to any revisions, is 54%, while the correlation between the economists' forecasts for the NFP and the NFP number we get at the announcement is 62%. Another solid employment report could cause the dollar to recover some of its recent losses, but given Chair Yellen's dovish rhetoric, we believe that even a strong report may not be enough to substantially affect market expectations for the next rate hike. Therefore, we would treat any strength in the dollar following the release as providing renewed selling opportunities. Overnight, the yen strengthened against its major peers, while the Nikkei closed down 3.6% after the Bank of Japan's Tankan survey for the first quarter showed that sentiment among big manufacturers slid to its lowest level in almost 3 years and may fall even further in coming months. The index for big non-manufacturers fell as well, but not as sharply. Perhaps even more worrisome is that big firms expect to cut their capital expenditures by 0.9% this fiscal year, a turnaround from plus 10.8% the previous quarter. The disappointing results highlight concerns that a stronger yen, as well as the slowdown in China and other emerging market economies, has hurt Japanese exports and thus the confidence of big manufacturers. Following a contraction in the fourth quarter GDP, as well as another flat reading in February's core CPI, we believe that this deterioration in Japan's manufacturing outlook is likely to add even more pressure on the Bank of Japan to ease policy further in the foreseeable future. As for today, during the European day, we get the final manufacturing PMIs for March from France, Germany, and Eurozone as a whole. As usual, the final forecasts are the same as the initial estimates, thus the market reaction on these news is usually limited, unless we have a huge revision from the preliminary figures. Eurozone's unemployment rate for February is also coming out. From the UK, we get the manufacturing PMI for March. The index is expected to have ticked up slightly, which could support the pound temporarily. Nevertheless, we still expect the report to show that the global headwinds, as well as the uncertainty surrounding the Brexit referendum, continue to dampen manufacturing activity through subdued demand. From the US, besides the employment data, we get the ISM manufacturing index for March, which is expected to have risen above the boom or bust 50 barrier after 4 months of lingering in contractionary territory. The forecast is supported by the Philadelphia Fed, Empire State, and Chicago indices for the same month, which all beat expectations of another contractionary print and entered the expansionary territory. This could indicate that the sector has begun to recover from the international headwinds that weighed on exports in recent months. The final market manufacturing PMI and the final University of Michigan Consumer Sentiment Index, both for March, are due to be released as well. In any case, we expect that these indicators are likely to pass unnoticed, as the market will be still digesting the outcome of the employment report. In Canada, the RBC manufacturing PMI for March is coming out, but no forecast is available. As for the speakers, we have Cleveland Fed President Loretta Mester on today's agenda. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.